Members, Investmentor members, welcome. Here we are again, Investmentor Podcast. Today we've got Abella. What? You just... Investmentor members, welcome again. Another podcast for us. Hope you guys have been enjoying all the previous podcasts. We try to bring in some people here that'll give some insight into what they do and maybe give you guys some, information or, I guess follow in what they've done. Might give you some inspiration as well. But today we've got Abella. His first time doing a podcast, right?
That is correct.
EJ. His name's Edward. I call him EJ. He's a good friend of mine. He's a mortgage broker, so he's familiar with the industry. And he's a fellow investor as well. So I think we can get a lot out of this one. So thanks for coming.
Thank you for having me.
See? Awesome. Can I ask you this question just straight off the bat then? Okay?
Sure.
Mortgage broking, right? You cannot be an investor or a homeowner, obviously, very obvious answer, without a loan.
That is correct.
So I say to a lot of investors, members, anyone who's looking to buy a property or build a portfolio, it matters to have a portfolio plan, strategy, which is what we kind of do here at Investmentor, give members a strategy of how are they going to build their properties from A to B to C to D. So you start with one property, 2, 3, 4. But the key to unlock all of this is the loan. You guys have to come in. So I've always said that the importance of a finance plan is probably more important than the actual property plan. Would you agree?
Yes, I
You
definitely
reckon?
agree. Yeah.
Yeah, because you've invested now, and you see some difficulties it can be to try to get a loan, and that's why it's so important that before you sit down this is what I think anyway. Before you guys sit down and think of this, I can get to 3, 4 properties. Well, you may not. You may not be able to get there, which means if you can't get there now, in 10 years' time, is how do you get there, which now comes in the finance plan of it. So I guess a key part to any successful portfolio or successful investor is to get, I believe, with a broker, right? The broker has to understand kind of your 10-year plan. Let's say, for example, you get advice or you have a mentor that can get you to say, hey, look, Dean, Jacob, I reckon you can start here, get 1 property, and then in 5 years' time have 4 properties. And they're basing that on your income and how much you can save, probably the equity growth, or that means the property growing. But then when they sit down with the broker, you can only get 1. So what happens? What happens? Anyone? What do you think happens with that, Jacob? Do your dreams get shattered at that moment? When someone says, hey, look, we got a great plan for you, 4 properties in 5, 6 years. And then you go see the broker and says, hey, look, you could probably get 1, maybe 2 in the next 3.
That is quite shattering, yes. That's
shattering?
Yeah.
Yeah. Dean, you reckon?
But where would that discrepancy come from? Like, why would...
Because the discrepancy comes from 2 different outlooks. Because from a property outlook, you could, let's say you could save up $50,000 a year, every year. Okay. So from a property perspective, you're actually able to have a deposit and get that property, because all it is having a deposit. That first property might grow in value. You may be able to take some money out and then get to the next property. So everything is based on, do you have a deposit? And if you do have a deposit, then you can move. If you have equity, you can move. The discrepancy lies in what you can actually borrow. So physically, you can have the money. You could have $300,000 as a deposit, but not be able to get any borrowing. Like you can't actually borrow any more money.
And this might be a question for you, Ed. Why wouldn't you be able to borrow more money? Like, what are the factors that kind of play into that?
Sure. So, look, as borrowers or as brokers, what we do is we look into your serviceability to get the loan, and a couple of factors take into play there where it's really, to boil it down to is probably income versus expenses, and what the lender's risks are to lend you the money. So as with what John says, you may have a deposit to put down on a property, but depending on what your income versus your expenses are, they may be only willing to lend you a little limited amount of money compared to what you're hoping to borrow.
Yeah. So when he says income versus expense, it's more like, okay, you've got 300,000 there sitting there, and you want to buy a property, and you want to buy something that's 600,000. Can the bank lend you the other 300? So you've got 300. Can they lend you the other 300? Sometimes it's a no. You may think you can, and you might go to them and say, "Hey, but I've got 300,000," and all depends on the different banks' lending policies. Okay, so as an example, initially a lot of people might think, like, if I ask you guys, name me 4 banks. Go. Name me 4 banks. Go. Off the top of your head.
St. George.
Yep.
ANZ.
Yep.
Commonwealth Bank.
Yep.
Westpac.
Yep. Westpac. Anyone else?
NAB.
Yep.
That's the majors.
Yeah. So to anyone's like first thought of a property, of a bank, is going to be the ones that Jacob had just said. St. George, Westpac, Commonwealth. So if I asked you, what banks? 4 banks. So if you were going to get a loan, what's the first thing you think of?
One of those banks.
One of those banks, right? Now, when I said like each of them have different policies, how many lenders do you think are out there? Give ballpark.
Oh, look, 40 to 50 banks nationwide.
There's like 50 banks. You just named 4. Can you name me 10?
No,
Nah.
definitely not.
See, as a broker, he said there's about 50 other lenders. Each of those lenders have different policies. So if you can't get 300,000 off the 4 that you've just mentioned, are you going to give up? Are you going to say to yourself, well, shit, I can't get a loan? And you walk away, you go home, you tell all your friends, you've told them you want to buy a property. They will, oh, have you got the property yet, Jacob? Oh, nah, I can't get the lending. You will go home and be like, that's it, done. And then the bank might tell you, yeah, you need to increase your income because your expenses are too much, or blah, blah, blah. So then you're going to go off thinking, I need to increase my income. That is the general scenario of many people. Yet, who was to know that there's 45 other lenders that could potentially get that 300,000 for you? You guys didn't know, but he knew. Okay, so as a broker, and this goes back to the discrepancies, this is why I said a finance plan is probably more important than a property plan, because the property is there. Property is not something difficult. Like, to buy a property is simple. Like, you don't even need anyone. You can just go online and buy it if you've got a deposit. Building a portfolio is, like, buying a property is simple, but it's not easy to build a portfolio, because that's a totally different dynamic. With finance, when I say it's more important, it's because you need to work with people that can find you all those different policies on your certain scenario. Because we all have different scenarios. How do you know those other 45 won't say yes? Okay, and that also has to do a lot with the relationship of the broker to the lender. They are basically the gap, the bridge that brings you to these 50 other lenders. So there's been many scenarios. So when I say a successful investor is one that has a good finance plan, basically what I mean is they have a good broker alongside them to be able to build from 1 to 4, because you might buy your first 2 with the 4 major banks that you just mentioned, and then the other 2 ends up being with non-banks that you don't never even heard of, right? But I'm sure you've heard of them. Have you heard of ING? Have you heard of? Name me a few more.
Pepper.
Yes.
Pepper. You've heard of that?
They have a building in North Sydney.
Yes. Have you ever wondered what that is?
Yeah, I had no idea what it was.
But they've got the biggest sign in North Sydney. Yeah. That's one of them. ING, Rams. There's a big sheep in the ads. You know that? Oh, is that lamb? I don't know what it is.
Oh wait, I always
Ram?
thought Rams was they were brokers. Are they a bank? Are they lending?
Well, they're owned by Westpac.
Oh wow, I didn't know that.
Yeah. Suncorp. Have you heard of Suncorp Stadium?
Oh yeah,
Have you heard of Suncorp Stadium?
Yeah.
Have you guys know what Suncorp is?
a bank.
A bank. Yeah. So there's that. Who owns Suncorp? It's Commonwealth, I think.
No, Bank West is owned by Commonwealth. I'm not sure if anyone owns
Bank
Suncorp.
West.
Yeah.
But the funny thing is, all of these sort of
Second-tier lenders.
what they call second-tier lenders are actually owned by
The bigger
the
ones.
bigger banks.
So does that mean they tend to give you the same outcome, or will it be different?
No, they still have different policies.
Different.
So I don't know if there's something that we can say in the
Say
podcast,
it.
but yeah, look, I mean, I think at some point, like with these, second tiers, not to say that they are more flexible, but their policies are slightly different, and they can service you whether, if a policy with, one of the main lenders might be a little bit too strict, then it's probably a little bit more relaxed, and they've got that, lower second tier that they own, that might give you the finance.
Yeah. So, yeah, Jacob, to answer your question, that's where the discrepancy lies, because many people don't know that there are other solutions that you can look for. But obviously you need to have a good broker to find you that solution. Yeah.
I agree.
Yeah. So that's why it's important with the finance plan, to get that set right in the beginning. When I said, more important than the property plan, I think even before the finance plan, and comes back to you as an investor now, Ed, is before a finance plan, before a property plan, you need to be in the right mindset. Agree?
Yes, agree.
Because I still remember when you bought your first one, you were like nervous as hell.
Yep.
You were pretty.
That's correct. I know that I wanted to do it and start investing, and I think, I don't know, everything just aligned, because I might have mentioned this to you before, that had it already in the back of my mind that I wanted to invest, and I had already approached, a broker at the time, and then you came along, and I knew in the back of my head that I wanted to invest in my first property, but throughout the whole process, even though I've signed the contracts and everything like that, I was always nervous and scared about, proceeding with it, because I mean, it's just, your first biggest purchase.
What was the actual biggest fear though? What was the actual fear? That's what I was always curious about when a lot of people get in that. Because when you buy your first one, yeah, you feel nervous and you feel like emotionally you're like, you kind of get, some people even feel sick when they're signing the contract. But what is the actual fear of what was going to go wrong?
Probably, if I think about it and it boils down to it, is probably the repayments. If I can pay it and keep it. I think, throughout the whole process, once I accomplished one hurdle and we moved on to the next stage, then I'd have the fear about, the next stage. But I mean, everything altogether is probably just the repayments. It's just paying the money. If I can pay it without, having a default or anything like that, investing in my first property, that's probably the biggest one.
Yeah. So it was an investment property, right?
Yeah.
So the fear was you having to pay if there was no tenant.
Yep.
Okay. And how did you get over that fear?
Well, I mean, I think once it was done and dusted and you've got the tenant in there,
that's when you big sigh of relief.
That's the big sigh of relief.
Oh,
yeah.
thank God, there's a tenant.
Once they found yeah.
Were you not confident that the tenant was going to be found? Is that why? Were you thinking like, oh, I'm going to buy this property and like for 6 months no one's going to live here?
Yeah, of course. That's crossed my mind. I'm like, buying a property and what if it doesn't get tenanted and then I have to pay for it myself?
Yeah.
Yeah, and then how long is it going to find a tenant? Then I have to prepare for 6 months or even longer. What if it takes longer than 6 months?
Yeah.
But I mean, yeah, obviously partnering up with, companies such as yourself that does all the legwork. They found a tenant within
How quick?
2 weeks, I think, less than 2 weeks.
Yeah.
Of it being out on the market.
Yeah.
With very, very high rental yield.
Yeah. Yeah. So, I guess you could probably say, yeah, you had a fear of tenant, but you probably had a fear of, tell me if I'm wrong here, fear of trust that it was actually going to happen. Because if you look back now, and now you've invested in 4 other properties, what would you advise that yourself? Like, let's say you go back in time.
Yep. What would I advise myself?
In 2018, and
on the first property?
you're sitting right, and I'm you 5 years ago, whatever, right? And I'm thinking, oh man, I'm not going to get a tenant, man. No, I'm shit scared. No, this is not right. And now you said, you got a tenant within 2 weeks. Is it still being rented?
It's still being rented,
has it
even
ever,
during the whole COVID.
Has
and
it
I've
ever
had the
been
same tenant?
Has it ever been vacant?
No.
Okay.
I've had the same tenant since 2018.
Okay. So talk to me now. I'd be like, Ed, I don't want to do this. Like, it's not going to get tenanted for what if it doesn't get tenanted for 6 months? What are you going to tell me now that you know this?
Well, yeah, the advice that I'd give myself back then is just do it. If I'm in if you're in a position to do it, like you've got the funding ready, you've got the borrowing, finance and everything, that all aligns, then just do it because, one of the advice that you've given me is, regardless of what happens, it will always be tenanted. It may not be tenanted by, the ideal amount that you want, but if you drop it by $10, $20, maybe even $50, it'll get tenanted by someone. So I think that's something that I've kind of adopted in terms of investment properties to not worry as much, because, at least I know that, there's always going to be someone that's going to need to place the rent. It's just, whether we can come to an agreement on price.
Yeah.
Yeah.
Oh, that's really interesting because we got Jacob over here as a first-time investor as well. First time ever.
That is correct.
Are you nervous or anything?
Yes and no. Like, because I'm still yet to settle.
Yeah.
So I actually don't have all of my deposit yet. So that is a little bit nerve-wracking. The fact that I still need to save the rest of it. But yeah, like, I mean, I am nervous the fact that if it's not tenanted, but to be like, I come from I mean, I think you're aware of this, John, that I used to work as a property manager way back.
Oh yeah, he was a property manager
when I was 17.
Yeah.
But so
that's not way back.
Well, yeah, not really. Well,
a couple of years ago.
Yeah. Well, it was before uni, so it feels like a long time ago.
So you have first-hand experience then on leasing out properties.
Yeah.
And then so what was your experience on, I guess, the close rate, percentage rate, or?
Yeah, well, like, I was based in Leichhardt, but I had properties all over Sydney. Like, and very rarely, like, that if they were real shitholes, then it may have been a little bit difficult. But I think the longest property I had was probably about 4 weeks. Everything else within 2, we'd get it rented out.
Yeah.
Yeah, great.
And if you remember, Ed, before we even got into a property, we always factor in 3 to 4% vacancy rate, which is about a month on the cash flow. So, you know, like what Jacob said, it's about 4 weeks. And even during COVID, like, you know, people had to drop their rent down. But yeah, I've always said there's no such thing as a property can't get rented in Australia. It's just the owner is expecting something that the market is not wanting. So if you drop your rent down $50 a week, it means your cash flow drops probably. If you were renting in an ideal cash flow of, let's say hypothetically $500 a week, with that $500 a week in cash flow, your end return at the end of the year, as an example, is $4,000. If you drop it down $50 a week, then your end of year result is $2,000. That's how I look at property. Yeah. So from that experience, did it make it a lot easier now buying the next one?
Yes, absolutely. I mean, obviously, you would know that the next couple of ones, I kind of had no
hesitation,
no real hesitation in putting,
and not many
the signature
questions.
to the yeah.
Like,
I mean, all I did was just rely on, you know, the facts and figures that you guys presented, and if it made sense, and you know, the research was there, then I don't know. I guess, and then the last question I would ask is, John, should I go ahead with this one? It's like, if it was yes, then sign away.
If it makes dollars, it makes sense, right?
Yeah.
Ed, can I ask you a question?
Yeah.
What makes you so trusting in John? In his
What a question!
advice- in
What
his
a question
advice
to
and
go right in
opinion?
front of me,
That's a
Jacob.
very good question.
What a question! You should ask that to a lot of other people as well. That's an interesting.
Sorry, can you
question.
just repeat that question again? Why I'm so trusting in John?
Yes, yeah. So, like, yeah. Why do you trust in John's advice and his opinion on this sort of stuff, or just in general? Because you've known him a long time, right?
Oh, look, yeah, we've known each other for a long time. We're actually just childhood friends. Grew up with each other. His experience in the property industry as well. Vast knowledge in, property, and I know that he does all the research in, the projects that you guys get into. And I guess with experience firsthand, not only with my properties, but with a couple of friends that have purchased off John, and seeing the value in growth and everything else, all the facts and figures that come along with it, rental yields. Then, moving forward from this stage onwards, I don't really have any hesitation with making a decision on whether he thinks this that particular project is a good one to get into or not, because I think all of our friends have had tremendous growth in property value over the last couple of years.
Well, I think EJ's probably got a lot of inside experience as well, because we have a lot of mutual clients, friends as well, and he does a lot of the refinancing and getting the valuations done, and those ones that have purchased, he's personally does the refinance, so he can see. He's the one ordering the valuations, so you can see what they bought it for and what it's grown. So he would have, that experience as well.
Yeah.
So, well, did that help answer the question of the trusting? I think it was just more they trusted because I don't know, the property.
But do you
I
think?
don't know. Did I even answer that?
Do you think your trust would be less or more, like, because obviously you've known John your whole life, right? Is that trust kind of embedded in the fact that you guys have been friends for so long, or do you think you see the way he works and that's more of a telling, or is?
Oh, look, I mean,
I think is that let's rephrase this question. Is it just because we're friends, or
am I
is
trusting
it,
you just because we're friends?
or is it just, or do you actually?
Well,
believe in the
I
research?
would trust him because we're friends, but based on, obviously when it comes to a monetary value and putting money into something and it's a big purchase, obviously it's not just because we're friends that I'm trusting him. It's definitely to do with like the experience and knowledge and what he's done in the industry thus far. That obviously builds trust.
But in saying that, not all property will grow at the same rate as others. That's why it's so important. It's not about one particular property. It's about a portfolio, right? So this is what I try to tell even all my friends. Yeah, you can be recommended a property, but the expectation for that one property to do all the heavy lifting for your portfolio, to think that you're going to retire after one property, it's not realistic. You need to be able to build at least 4, maybe 5 properties by the time you're 60. Then you could see the value in that property. Some will grow better than others. Some will cash flow better than others. But the whole purpose of it is to, diversify. And by the time you're 55 years old, it allows you to have options. That's what I say to all my friends. Don't think of it as I'm going to make heaps of money. You probably will in the next, say, 20 years. But but more importantly is in 20 years' time, you can have the option of working or not working. You can have the option of selling your entire portfolio. You can have the option of selling half, paying the other half. You can have the option of passing it down to your kids. So many options. That's what I say. That's why it's more important. Do you still stick by that mantra?
Options?
The options part?
Yes. Yep.
Yeah.
That's why, obviously, I've been listening to, your advice and trying to have those options and diversify into different states as well as apartments and
houses,
house and land. Yeah. With what you said, some will grow better than others, or you'll get better rental yields than others. So I think if you have a well-rounded approach to your investments, balanced portfolio, then I think you can't go wrong. And I remember one thing that you also said is, obviously, if you diversify into different states, every state has a cycle. So if one state has a boom, you might have another state that might be stagnant until the cycle turns around and increases again. So I think that's what I've been trying to do as well with the purchases and trying to choose the states.
Well, you guys know that he's about to be, probably next year he'll have his 5th property. That's probably now going off 1 a year since he started.
So how old were you when you bought your first one?
Too old,
actually. Because I think it definitely would have been better when I was started a lot younger.
Jacob's age and Dean's age. That's when we all should have started at that age.
Well, how old are you guys?
We're 23.
Yeah, I wish I started then. But I think I did start 30 or 31.
Yeah.
Yeah, 30 was the first property purchase. But if we had started around your age, then...
So, and were you a broker at that time?
Absolutely not.
Oh, okay.
So when I purchased my first property, I wasn't a broker then.
So what were you doing at that time?
I was. You can tell from his body.
No, not at all. I was just working a office job. So
he worked for Anytime Fitness.
We shall not.
Anytime Fitness.
We shall not disclose what industry I was in because it's completely far from.
As a trainer?
Personal trainer?
No. I started off like that when I was around your age, probably when I was younger, but I didn't do that for very long. So it was just mostly admin and office roles, managerial roles.
By the way, he didn't tell you that he also he is an owner of 2 Anytime franchises.
Really?
In the Philippines.
Oh, in the Philippines, wow.
Yes, yeah.
So this is a very good topic. I'm glad you brought that up.
Okay.
Tell me now, you basically bought those businesses.
I know where you're going with this.
Okay. You bought those businesses when? Before you bought property?
Yes, before I bought property.
Okay, so and that's a lot of money invested in those gyms, because you're talking down payments or whatever it is. Would you say the amount of money you invested in those gyms, how many properties as a deposit could you get?
I probably could have got 2 to 3 properties. If I went the other way and straight into property rather than business, probably 2 to 3 deposits.
2 to 3 deposits.
Depending on the purchase price, but maybe potentially even 4.
Yeah.
Back then, because property might have been slightly a little bit
affordable.
affordable.
It would have been way more affordable. But it's still good anyway. You know, you're probably mid-20s
when I did that.
when you did that.
Yeah,
See?
mid to late 20s.
So-
I think 25, 26.
So you're still trying to find a way to not just working. You're still trying to do other businesses or whatever. Managed to get into the gyms. Bought 2 franchises. See, 2. Why not just 1?
Mhm.
I had to go 2.
Just to clarify, I didn't do it on my own. I've got partners, so we all pull our weight. But fortunate to get into businesses on top of property as well.
Yeah.
Would you be able to discuss the differences between investing in business and in property?
Yeah, that's a good question. That's what I wanted.
That's where I thought you were going to go straight away. So, comparing business versus property.
Yeah.
Obviously, John would know this from running, Investmentor. I'd probably say property is more stable. It's more of a stable investment, something that you can set and forget and not really think about it, unless obviously something happens, like if your tenant were ever to move out, then you have to think about getting another tenant in. But definitely more in my opinion, more stable and less risky property. Business, you've got to be very hands-on, and if you're not hands-on, then that can determine whether your month's profitable or not. If you just heavily rely on the staff to pull their weight, and again, it depends if your staff, because you can understand that my businesses are overseas, so there's just a lot of reliance on the staff there just doing everything for us and just touching base weekly with them. But if we're hands off, then it's not probably ideal. And it can be a lot more riskier, and a lot of things can happen if you don't oversee the business. But investment wise, I think both. I've been happy with both investments. But if I had to make a choice, maybe what I know now, I probably maybe would have, and this is in hindsight, with COVID coming around and everything like that, because it was doing really well pre-COVID, but business can really get affected by external factors. You can't control it. But I probably, knowing what I know now, I probably would have just invested in property.
Interesting.
Yeah, I probably would have just invested in property.
Well, I guess it was a significant amount of money to invest if you could have got almost 4 properties.
Yeah, because I'd probably be in a very different position today. That's like coming to almost 10 years ago.
Yeah. Just have a think about that, guys. I know it's in hindsight, but with the gyms, right? It makes it. I guess it's making decent cash flow, right? But COVID sort of hit that a little bit. But then there's ongoing maintenance that you got to do, so you have to kind of reinvest into it. It's basically like trying to renovate your house every 5 years.
Yeah, that's
and then
right.
you have to put more money in.
Yep.
But then I think the good thing with property, if that's 10 years ago, like we've just gone through a massive boom. If you had got 3 or 4 properties.
Yeah, the equity over those last 10 years, very different position today. I think.
Very different position. Yeah. But anyway, that's hindsight. So how are you managing now? So you're a broker now, investing as well. Well, property investment is very hands-off. You don't really do too much. You've got the gyms overseas. But in terms of the broking part, what I was sort of curious to know was, every time I kind of see you working and you do a borrowing for someone, how the interest rate differs so much.
Per lender? Or?
Yeah, for a lender. Or not just the interest rate, but the capacity. As an
Yeah.
As an example, guys, we have one mutual client who no bank would lend to. No bank would actually give this guy borrow. Is that right?
Further lending.
Any further lending, because he's heavy investor already. EJ managed to find one lender, and they were able to borrow more than $1 million.
Whoa.
So from 0 to $1 million. How does that happen?
Can you answer that? How does that happen?
How does that happen?
Sure. Look, with probably major lenders, like with his particular profile, with major lenders, his borrowing capacity was almost, based on what he wanted to achieve, little to no lending left. But with the one lender that we found with, their serviceability is a lot more.
You didn't have to mention the name.
Oh, can I redo that then?
Yeah, redo that.
Yeah. With this particular lender that we were able to, source out for the client, the serviceability and what they take into consideration when we're doing the assessments for the client is a lot more flexible. Now, there are lenders out there that, let's say for more common lenders, with your income and expenses, some lenders will probably base the expenses if you have existing mortgages with an assessment rate, a buffered assessment rate. There are some lenders that will take as is current repayments, no buffered assessment rate. So that will actually increase the serviceability of the client. There's also lenders that, John would know, with investors, there's usually a monthly expense on holding the property. On average, it's roughly anywhere between maybe 200 to 300 per month on investment property expenses. Now, there are some lenders that actually don't take that into consideration. So that's, again, savings of about, discounting of about $300 that doesn't get included to your, expenses that will help increase your borrowing capacity again. So, look, different lenders have different policies on how they assess someone, and that can, bring the difference on, how much the lender will lend you.
So it's a game of income versus expense. Some lenders' policies, the way they do the expense compared to the income is all different. But you'd have to have that knowledge to know, hey, let's take you to here. You don't really want to take them to the good thing is, I think, with brokers is they would have an idea before you go into any sort of application, because you don't want to do an application to a bank and get rejected. You'd want to know beforehand which ones you should be going to. That's the value of brokers. So they can guide you and say, hey, look, these policies here, this income, this assessment, blah, blah, blah. We should take these
This
two.
is where you fit.
This is where you fit. So that's what happens. But you could see that, all this stuff that's talked about in the media about borrowing is going to get harder, people are not going to get loans, this and this. Yeah, potentially it can, but there's always a lender or solution out there. You just need to know where to find it. And you don't know where to find it unless you know a broker that knows where to find it. So that's what I would say to that question. Yeah. Agree?
I agree.
Yeah. Yeah. So let's talk about, I think, what people want to know, like my curiosity about interest rates, how some banks are up, some banks are down. Again, like this is a thing, sorry. I have a friend who was with and they're on like 3-point-something% interest rate.
Mm-hmm.
I think just a week ago, they received a letter saying, hey, we want to, I think, bring your interest rate down to essential loan or something.
Mm-hmm.
And it was going to bring it down to 2.75%. So it was from 3.75 to 2.75, even though interest rates are going up. See, so I don't know. I just see some banks, whether they follow the interest rate rises or not, they probably will, but not to the... There's still going to be I think some banks
They're
out
still
there,
going to try and remain competitive.
they still have to remain competitive. Do you agree?
I agree with that. Did they request for the increase? So it's just the lender that
Yeah.
actually approached
They
them.
just sent them a letter,
That's
an email.
That's actually quite interesting because not most lenders will do that for existing clients. It's usually trying to give discounts to new clients to get them on board. But that's
Yeah.
good for the lender that actually did that.
Yeah. So, I think depending now what the banks are going to do, but there's still going to be, I think, banks out there that's still going to be a competitive interest rate. It's not going to be as drastic as people might think. Are some banks right? Are some lenders going up more than others?
Yes. There are some main lenders, usually the majors, a couple of non-banks or second-tier lenders that have actually quite been increasing their interest rates quite regularly. And we've noticed it over, some of these lenders have been increasing it, 3, 4, 5 times over the last, 3 months only. But the only thing that they've actually touched and that they've been increasing are only the fixed rates. So the fixed rates are the ones that, the banks have regularly been increasing, in phases. They haven't really touched the variable rates yet, but I think they've been actually waiting for... Well, I think the variable rates have been waiting for the RBA to increase their rate, and that's
Sure.
when the variable rates will potentially follow.
Right. How much have they increased so far, you reckon?
Well, I think
average?
it was supposed to be today, wasn't it? And I think they've increased at 0.25 basis points.
So what, for example, what's the fixed rate right now for one of the lenders?
Owner Rock, investment, P&I.
Yeah, both.
Oh, look, I mean, it ranges,
What's
if you're
the range?
doing from 1 to 5 years, fixed rates, investment, you're now looking at probably the mid-2 range to, I've seen some of them already hitting the 5.
Did you say mid-2?
Yeah.
Mid 2%?
Mid to end 2.
So like
For
2
P&I.
point
2.89, 2.99.
for a fixed rate,
Yeah.
P&I,
Yes.
investment.
Don't quote me on that.
That's
You're
still-
putting me on the spot.
That's still all right. But that's still all right. Isn't it? What's
Yes.
what's interest only?
Interest only. Fixed. I'd probably say you're already looking at in the early 3s to start off. Early 3s to 5s now with some lenders. I mean, on average, it's probably mid 3s to mid 4s. That's probably the range you're looking at.
Yeah, mid 3s to mid 4s. That is not that big. That's not that big.
No. I mean, it was that range, 2 years ago,
Yeah.
3 years ago?
3 years ago
Yeah.
we were that interest rate.
Yeah, so they're just correcting the market back to normal.
Yeah. Well, yeah. They brought it down during COVID, down to like historically low interest rates. It was only bound to go up, and they've just gone back to where we were 2 or 3 years ago. 2 or 3 years ago, everyone was still investing. People were still investing. So, yeah, look, I don't see any big thing with interest rates. I mean, a lot of people are afraid to get in the market because they think interest rates are going up. Those type of things. It's probably fair to say it may be harder for some people to get more borrowing.
Yeah.
These days.
Yeah, it will affect borrowing capacity with the increase of interest rates. Obviously, that will increase the assessment rates. So I guess if you probably are just that borderline borrowing capacity, then yeah, it can affect your borrowing by anywhere between $20,000 to $50,000 on the borrowing capacity. But it's not a drastic amount.
Yeah. That's interesting. No, but that's true though. What you're saying is true though.
Yeah.
What you're saying is true. So are you looking now? I mean, in the last sort of COVID period that happened, in terms of volume, in terms of for yourself, like you're now getting more and more clients. what are the common sort of questions that they ask brokers these days? Like, what are they sort of afraid of when they come to like investing? Are they, nervous about something? Do they give you the interest rate question? Are they are more people thinking about finding a lender that is? Are they more sensitive to the interest rates?
Yeah, look, I'd probably say, there's a difference. I mean, whether you're experienced, you've already got property before, or first-time buyers.
Let's go first-time buyers.
Probably the first-time buyers are the ones that have a lot more questions, and also the ones that are probably more rate conscious about getting the best deal because it's their first time. They also probably want more of a reputable lender to go with. But when you've got the experienced investors, they're actually just like they don't really care what lender to go with as long as they can get the lending, but something that fits their profile, but obviously with the best interest rate that they can get.
Yeah, because I think that all those first-time investors, when you say they're rate conscious, I mean, we're now at a situation where it doesn't matter what lender as long as we get the lending. Like, there's a lender out there because, for me, for example, is we just want to continuously buy property. Which lender out there will
give you the money?
Give us the money to do it. There's going to be someone out there that will do it. Don't forget as well. Now, I'm not saying for people to go this way, but there are also private lenders out there. Yeah.
Yep.
Which are non-bank lenders, like totally non-bank. Obviously, the interest rate's higher, but it does allow you to get something. So really, what happens is if the options are so like that, you got no options and you want to settle the property, you can potentially go to these other lenders short term until you can refinance. Right?
Yeah. Once you're in a better position, then refinance to a better lender with better interest rates. And again, look, at the end of the day, it's just going to depend on your personal profile at the time to determine what lender you may have to be suitable with.
Yeah. What do you think Jacob's suitable with? He looks like a
stand-up guy.
Stand-up type of guy. I think I'd say.
I think with him, it looks like you can take him to any lender.
No.
Any lender will want him.
You reckon? You think one look at him and they'll offer him the money?
Yeah, nice clean cut. Suit.
Wait, so they lend based on looks, do they?
That's part of the criteria.
Okay.
Yeah. Cool. EJ, thanks for coming. Hope you had a good time on the first podcast. Really insightful, some good stuff. Learn a bit about your portfolio, your mindset in the beginning, and a lot of people is going to go through that same thing. So it's good to hear from you and what you went through. And guys, EJ from Organic Home Loans. I'm sure maybe some of you members have worked with him before already, or are working with him now. Hit him up if you think you want to refinance or get a home loan.
Details, numbers on the below.
Click on this link.
Subscribe.
Yep.
Like, share.
Yep.
Thank you, guys.
All right.
Thank you very much for having me.